Okay, let's unpack this. Today's deep dive is your shortcut to understanding a really significant piece of family financial relief in the U.S. tax code.
We're talking about the 2025 child tax credit.
Exactly. We're breaking down who qualifies, what the limits are, and also, the big legislative questions hanging over it all.
Right. It's about getting you well-informed fast.
So, okay, for 2025, baseline, we're looking at a credit potentially up to $2,000 back for each qualifying child.
Correct. And that's a direct reduction of your federal income tax bill. It's not just a deduction, it's a dollar for dollar.
Which is a big deal for families, obviously.
Absolutely. And what's really interesting here, I think, is its sort of dual nature. It's almost like two policies in one package.
How so?
Well, first, you have the standard non-refundable child tax credit that can wipe out your tax bill, bring it right down to zero.
Okay.
But then you've got the refundable part, the additional child tax credit, or ACTC, that's specifically designed for families who might not owe much or any income tax.
Ah, so they can still benefit.
Precisely. They can get some of that credit back as a cash refund. For 2025, that's up to $1,700 per child. So it really bridges that gap, between just a tax break and actual direct financial support.
Got it. And a quick housekeeping note for folks digging into the forms. If you remember publication 972.
Oh, yeah, that one's gone. Obsolete now.
Right. So all the calculations, everything you need for CTC and ACTC, it's all consolidated onto IRS Schedule 8812 now.
Much simpler, hopefully.
Hopefully.
Yeah.
So the big question for most people listening is probably, do I qualify? Or more specifically, does my child qualify? What are the real make or break points here, the big hurdles?
Yeah, there are 7 tests technically, but you're right to focus on a couple that are absolutely critical. They create these sort of benefit cliffs.
Okay, like what?
First off, the age test. Your child has to be under 17 years old on December 31st, 2025, not 17 under 17.
And that's a sharp cutoff, isn't it? No wiggle room.
None at all. A child turning 17 on December 31st gets nothing from this specific credit. The day before, they qualify. It's that stark.
Wow. Okay, that's number one. What's the second big one?
The Social Security number. This is non-negotiable. The child must have an SSN, a Social Security number, that's valid for employment in the U.S.
So what about kids with an ITN, an individual taxpayer identification number?
Nope. Unfortunately, under the current 2025 rules, children with ITNs are not eligible for the $2,000 CTC or the refundable ACTC. Full stop.
Okay, that's crucial to understand.
It is. Now, there is a fallback, a smaller credit. It's the $500 non-refundable credit for other dependents, the ODC.
Ah, okay.
That can sometimes apply to kids who don't meet the CTC rules, like maybe they have an ITN or they're 17 or older, or even other relatives you support. It's less, but it's something.
Good to know. And the other tests are more standard dependent things.
Yeah, relationship support, dependent status, citizenship, residency, and the child's own filing status.
Yeah.
Basically ensuring they are truly your dependent and live with you most of the time.
All right, let's talk income then, because even if your child qualifies, your income level matters, right?
Definitely. There are phase-outs. For 2025, the credit starts to shrink if your modified adjusted gross income, or MGI, goes above $400,000 for married couples filing jointly.
And for single filers or head of household?
It's $200,000 for all other filing statuses.
Okay. And how does it shrink? Is it gradual?
Reasonably. The credit amount drops by $50 for every $1,000, or even part of $1,000 that your MGI is over that threshold. So yeah, it can phase out fairly quickly depending on how far over you are.
Gotcha. Now, back to that refundable part, the ACTC. You mentioned it's tied to work.
Yes, very deliberately. To get any of the refundable ACTC, you need to have at least $2,500 in earned income. Wages, self-employment income, that sort of thing.
And the more you earn above that,
the more potential refund you can get. It's calculated as 15% of your earned income over that $2,500 mark.
up to the cap.
Right, up to the $1,700 per child maximum for the refundable portion in 2025. It's structured as a work incentive, essentially.
Makes sense. Okay, now here's where things get really interesting, maybe a bit unsettling. All these rules we just laid out for 2025, they're temporary.
That's the elephant in the room, isn't it? If Congress doesn't act, doesn't pass new legislation, then on January 1st, 2026, the rules snap back.
Snap back to what?
Back to how things were before the big Tax Cuts and Jobs Act of 2017. And that's a dramatic change.
How dramatic?
Well, the maximum credit gets cut in half down to $1,000 per child.
Ouch.
The qualifying age drops, too, becomes under 16, not under 17.
Another cliff.
Exactly. And those income phase-out thresholds, they plummet down to just $110,000 for married couples filing jointly. from the current $400,000.
Wow, that impacts a lot more people.
A huge number. And interestingly, under those old rules, children with an ITIN would become eligible again for the $1,000 credit. So it flips that rule completely.
So you could have the same family facing wildly different credit amounts just based on what year it is and what Congress does or doesn't do.
Precisely. And there are already competing ideas floating around Congress, a House proposal for maybe $2,500, a Senate one for $2,200. It just adds layers of uncertainty for planning.
It really makes long-term financial planning incredibly difficult for families.
It absolutely does.
So wrapping this up, what's the key takeaway for you listening?
Well, the child tax credit is complex, no doubt. It depends on your child's age, their SSN, your income.
And maybe most significantly right now, what happens with future legislation? That's the huge question mark hanging over everything.
Yeah. So maybe the final thought to leave you with is this. How does this legislative back and forth, this uncertainty, impact your financial planning?
It really forces you to think about potentially very different tax scenarios year to year. It shows just how much these policy decisions in Washington can directly affect your family budget, even down to how you estimate taxes and fill out your W-4 form. Something to keep a close eye on.